Hi, I'm Joseph Rand with homebuyertaxcredit.com, your best resource for information about the homebuyer tax credit. Today we're going to talk about how the homebuyer tax credit impacts married couples, because there are some very odd restrictions in the way that the homebuyer tax credit applies to a married couple. So we're going to talk about married couples, and then we're going to talk a little bit about what happens if you buy with an unmarried partner. It could be a friend, could be a domestic partner, something like that. As always, if you do have any questions about the homebuyer tax credit, go to homebuyertaxcredit.com. We have an eligibility test. It goes through all the questions, takes about 5 minutes to go through it, and whether you're married, single, whatever other type of situation you're in, believe me, we have questions that cover it. You'll go through and you'll get a recommendation. The only thing we remind you is that we're not accountants. You should always talk to your accountants before you make any major decisions. We're not intending to give tax advice. So what happens with the married couples? What's the situation there? It's very complicated. The main thing is this. To qualify for the homebuyer tax credit, and this applies whether you're first-time or a long-time homebuyer tax credit, in order to qualify as a married couple, you get measured together. The IRS looks at both of you together, and that means three things. First, you both have to be eligible. If one of you is eligible as a first-time home buyer in that you have not owned a home in the last 3 years, but the other one of you just bought a home a year ago, well, the one that just bought a home a year ago, that spouse is not eligible as a first-time home buyer, which means that person's ineligible, the first person was eligible, but both parties have to be eligible. Both spouses have to be eligible. That's point number one. Point number two, and this is where it really gets tough, is that both spouses have to be eligible for the same type of credit, the same type of tax credit, meaning that let's say that they're both eligible. Let's say that he has owned a home for the last 10 years that he's lived in, and let's say she's never owned a home before. Well, two people, if they were not buying together, if they were not married, each of them would be eligible. He would be eligible, let's assuming he meets the other criteria, but he would be eligible as a long-time homeowner. She would be eligible as a first-time home buyer. They each could get a tax credit, but because they're married, their mutual eligibility cancels each other out, and it renders the couple ineligible. So you not only have to both be eligible, but you both have to be eligible for the same type of credit. Brings us to the third point, and this is where it gets even worse, is that even if you both are long-time homeowners, meaning that you both have owned a home that you lived in, 5 consecutive years out of the last 8 years, even if both husband and wife qualify as long-time homeowners in their own right, they have to qualify for the same house. In other words, he can't own a house in this town where he's lived for the last 10 years, and she can't own a house in that town that she's owned for the last 10 years, where both of them would get the long-time homeowner tax credit of $6,500 if they were buying separately, but they get married, one of them decides to sell, the other one decides to sell, they're going to buy something new, move all of their things in together like a Brady Bunch happy little thing, they're going to go buy a house, come together, they can't get the tax credit. Because although they both qualify as long-time homeowners, they don't qualify for the same residence. Very odd, very strange. So those are the three things. You both have to be eligible for the same type of credit, and if that credit is the long-time homeowner credit, it's got to be the same house. Very strange. Now, a couple other things to keep in mind for married couples. The income restrictions for married couples. If you file jointly, $225,000 for a joint filing couple, up to between $225,000 and $245,000, and you can get a partial tax credit. If you file separately, okay, you get measured individually for the income restrictions, not for the ownership history, but for the income restrictions. So in that case, if he makes, let's say, $100,000, he's under the $125,000 limit for the homebuyer tax credit. Let's say she makes $150,000. She would not be eligible. He would. He gets a tax credit, but it's only half of the tax credit. If it was a first-time homebuyer credit, he would get $4,000 out of the $8,000. If it was the step-up homebuyer tax credit, he would get $3,250 out of the $6,500. In other words, they get measured, the married couple, if they're filing separately, they get measured separately just for the income restrictions if they file separately, and he can get it and she might not get it, or the other way around, as the case may be. And I realize that it could be a he and he. A couple states in the union, I'm not making a political statement. I'm just saying that in most cases I'm trying to keep it simple, he and she. Okay, that's the first thing, the income restrictions. The second thing, additional points, is that even if you are no longer together, even if you are separated pending a divorce, the IRS still counts you as married. So you could be, 2 years, 3 years separated, waiting for that divorce to come in, you're waiting for the papers to get signed. Your spouse's ownership history counts against yours. So if your spouse has done something that disqualifies him or her for the homebuyer tax credit, they disqualify you as well. And again, if you have conflicting ownership histories where you qualify, he doesn't, or you both qualify but for different types of credits, if you're still married, legally married, at the time that you close, well then, you're not going to be eligible. And then the last point about married couples has to do with when it's measured. Just note, it's measured at the time of the closing. So if you are not married now, and you close in May, because you need to close by June 30th, remember, you need to close in May, and you're still married, but you get divorced in August, for the purposes of the homebuyer tax credit, you were still married at the time that you did the transaction. What that also means is if you are an unmarried couple that's planning on getting married, you really want to pay careful attention to this, because it might make sense for you to put off the wedding, as if people need another reason to put off the wedding, but there's a reason to put off the wedding, put off the wedding so you can buy the home, qualify for the homebuyer tax credit, then get married, because the IRS is going to measure it at the time that you close, not the time at the end of the year when you file. Which brings us to the issue of unmarried couples, where the situation is much happier. If you're an unmarried couple, instead of being treated jointly and measured together, you're measured separately. The two partners, now they could be boyfriend, girlfriend, they could be significant others, they could be an unmarried couple, it could also be a father buying for a son, two brothers buying together, that sort of thing. It doesn't matter. It just has to be two people who are unmarried. For those people, they're measured separately. So if you have that kind of situation and person A doesn't qualify, but person B does qualify, person B can get the credit. And not that half credit that a married spouse filing separately can get, but that unmarried person can get the whole thing. $8,000 for first timer, $6,500 if they're a long-time homeowner. First of all, they don't both have to qualify, because if one qualifies, they get the whole thing. They can each qualify for different types of tax credits. Let's say it's a boyfriend and girlfriend. They want to buy a home together. He already owns a home that he's going to sell. He's owned it for 5 consecutive years out of the last 8, in which he lived in it for 5 years. And let's say he's going to sell it. She's never owned before. They buy something. He can get the long-time homeowner credit. She can get the first-time homebuyer credit, but they can't get more than one credit. They don't get $8,000 and $6,250. They get, the max they can get would be $8,000, and he can't get on his separate tax return more than $6,250. So that's the situation with married and unmarried couples. I know it seems unfair. I agree with you. I don't understand why Congress would do this. I don't understand why the IRS would interpret it this way. Seems to me that everybody's really big on protecting the sanctity of marriage. I believe in marriage, very happily married. I think marriage is a great thing. And it seems very odd that the homebuyer tax credit would penalize marriage in that way. Now, there's lots of other conditions and restrictions. You can get all the information you want at homebuyertaxcredit.com or homebuyertaxcreditblog.com, which has a lot of updates as they come up. So check out those sites, and as always, whenever we talk about the homebuyer tax credit, we remind you, we're not accountants. Make sure you talk to your accountants before you make any decisions. Thank you very much.